Happy Monday, members of the Altcoin Buzz Army. Maddie here with you on this 17th of May already. And look, it's been a tough weekend. I don't want to sugarcoat anything today. I realize that, for some of you, I'll include myself in this, we're looking at some major losses over the weekend. Not that I'm making light about it. Losses are, the kind of thing that I think you can distinguish, however. I want to disambiguate like hard losses from soft losses in terms of positions that you lose outright in the form of liquidation potentially versus your positions that you're down on. I mean, I'm down six figures versus where I was last week. That's just the reality of the situation, but I'm not selling at a loss. So I want to hope to bring some optimism to this conversation today. And why don't we do this? Let's highlight some of what's been happening. So if you're not at all up to speed on the news, what's been going on, I want to highlight kind of the main drivers behind this market dump that we've been seeing. And then I also want to end, like maybe in the latter half of the video, with just some positivity and discuss key strategies and key rules to keep in mind in the crypto space when you're investing, whether it's on a dip or otherwise. So just 6 or 7 key principles that I keep in mind at all times. I'm not a financial advisor. Hardly. I'm not offering you guys financial advice. But you know what? I think it's just solid wisdom almost that's universal. That's something that you ought to be keeping in mind. As you can see, the market right now, I don't think it really even needs any introduction. It's been bleeding significantly. We're down 7.8% on this Monday since yesterday. Still above $2.1 trillion actually, which perhaps is a silver lining of sorts. You think back to even a few months ago when we were below 2 trillion, like even though we've taken a hit as massive as this last one has been, it's still a sizable space. It kind of shows that, in my opinion, that crypto is here to stay, that yes, you can kind of hack off a few pounds of flesh, but overall, I mean, this is a Leviathan. It's not going anywhere, even on these very, very bloody days. And it is a bloody day, let's be honest. It's a Red Sea out there across the board. You can take a look at some of these prices, with the exception of, really, I'm only seeing Cardano, Stellar, and Solana. Everything else is down on the week significantly, in double digits for the most part. So what caused all this? Well, let's first get some perspective here to frame the issue, because again, I think at the core of what we're trying to say today, there's some positivity and there are some important reminders that we want to impart. Not that it's financial advice or life advice or whatever you want to call it, but just our perspective. So let's share here. Let's be real. Elon is not responsible for dump. Weak hands, uninformed investors, leveraged gamblers are. Elon was a catalyst that perpetuated it all, right? If someone's opinionated tweet can dump the market, it's clear we have a very long way to go. And a lot of people have been expressing this lately, the fact that this is still a very juvenile space. We haven't really matured significantly yet. If one person's negative opinion, albeit an influential person's, their opinion can wreak this kind of havoc. That's not a good thing. You think about the traditional spaces, you think about Wall Street, you think about precious metals and gold. I'll give the gold industry credit, because you have all these talking heads on a daily basis that come out, and some are for, some are against. Elon Musk wouldn't have been able to do this in the traditional market sectors. So is that a bad thing? Well, for now, it makes things extremely volatile. But again, extrapolating, looking at the long term, it shows just how much more room we have to grow, how much bigger this space can get. So that's the positive. Ultimately, and I agree with this last point, Altcoin Buzz IO, make sure you're following on Twitter. Decisions you make in panic are usually regrettable. Stay strong. Now, I hope you guys weren't too badly hurt over the course of the weekend. If you're buying and holding, then maybe you're down in your positions, but that really doesn't matter depending on the horizon of your holds and your goals, investment goals in this space. If you were among the leveraged gamblers, then perhaps you are hurting a little bit. Let's get to that in just a second here. So I think this is a good summary here of the hypocrisy that we're seeing. Pump and dump, no thank you. But buy $1.5 billion of Bitcoin. Tell people company accepts Bitcoin. Bitcoin price rises. Sell Bitcoin for $2 billion. Tell people company doesn't accept Bitcoin for environmental reasons. Yes, of course. So this in a nutshell is kind of the saga of Elon that we've seen over the course of these last, 2 months, ever since he and Tesla publicly announced their entrance into the space. I've harped on Elon Musk in previous videos. I don't really want to get into it here, but his hypocrisy right now in this space, his in my opinion, his irresponsible behavior is the kind of thing that I'm not going back to Elon Musk personally. He's become a John McAfee for me. He's just somebody whose opinion I'm going to write off from now on. And I hope he kind of quiets down a little bit, because obviously every time he has something to say, it can be good initially, but ultimately I don't think this is a good thing for the space. Case in point, everything that he's doing about Dogecoin. He's being mocked and ridiculed for his assertion that, hey, Dogecoin's doing well, but let's just up the speed transaction by 1,000 times and make it 100 times cheaper and blah, 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 blah. And you have the OGs in the space, Adam Back, for example, kind of clapping back at him and saying, look, Elon, this is not how it works. Like, you're out of your league here, dude. You don't know what you're talking about. And I think part of this tantrum that we saw out of Elon Musk on the weekend, and maybe he's just not used to it, but people clapping back and telling him that, look, you're wrong, or you're inconsistent about this opinion, or you don't know what you're talking about in this instance. I don't know. I don't know if this is an ego thing, but a lot of erratic behavior that's just weird, summed up pretty well by this, I guess, meme here. Really a 180, very, very hypocritical, like Dr. Jekyll, Mr. Hyde kind of behavior. It's unfortunate. So ultimately, the logical conclusion is that we have to have a bare knuckle cage fight between Michael Saylor and Elon Musk in Dubai. I don't think this is the kind of thing that can be done or sanctioned in Nevada. So this guy's suggesting we do it in Dubai. I don't see why not. That would be cool. Michael Saylor, by the way, is still fighting the good fight on Twitter, and filling in a lot of the logical fallacies that Elon Musk has presented here. So, Emperor, at Emperor BTC, I am a trader. I will long Bitcoin when it looks bullish, okay, and short happily when it's bearish. Makes sense from a trader's perspective. I have no cult, but I just want Elon to shut up about crypto and stop being the trigger for any dumps or pumps. Make Elon irrelevant for crypto already. Kind of circling back to my point earlier about how, this is a growing space. It's still a young space, $2.1 trillion. It's sizable, but it's going to get a lot bigger with time eventually. And there will be a time that comes when not only Bitcoin, but the rest of crypto is more resilient to the tweets, to the naysayers, even if they're at the level of Elon Musk. With that being said, I don't want to cover too much more news in this video. Check out, by the way, our Cardano price analysis and when we think it's going to go to $5, because obviously we're bullish about Cardano, ADA. But with all that being said, I want to talk about, just kind of candidly here and off the top of my head, about my experience, what's been happening in the crypto market, and what I've been doing to kind of stay the course, how I've been steering as far as with my rudder on these turbulent waters. And not financial advice, but I'm just kind of sharing some old school wisdom, none of which I came up with. It's just universal. And I don't care if this applies to cryptocurrency in your case, or whether you're trading Forex or other stocks, or you're just investing for the long term in low risk assets, whatever the case may be. I think these are universals that we have to sometimes remind ourselves of in the cryptocurrency space. Number one, and most importantly, is, of course, you should only be investing what you can afford to lose, right? We've heard this before, but we often don't necessarily put it into practice. And so cryptocurrency is a volatile space. You're going to see a lot of positive upside movement, but when it goes to the downside, that's where you got to be careful. Now, we're going to kind of talk about this in a moment. It depends on whether you're holding for the long term or you're one of those leveraged gamblers. I did some leveraged gambling over the course of the weekend, and I lost a good amount. I lost something like $1,600 on a position where I figured, Chainlink was so far down, I didn't see it going much lower below $40, and it did significantly. And I got wiped clean of about $1,600 on a position, however, that I was willing to lose. I said, look, this is an amount of money that I don't even account for in my tabulation and the way that I do my accounting for my investments and whatnot. So I have a feeling that Chainlink is way oversold right now. I think it's going to go higher. I underestimated the severity of the dip, and I got wiped clean $1,600. I couldn't believe it for the first time in a long time. This was a USDT position. But because I don't account for that money, that allocation that I had in my futures account, it wasn't pleasant, but it didn't sting as badly as previous mistakes I've made, because I kind of went into it with the full understanding that if I lose this in its entirety and completely, then I'm okay with that. I don't want to lose it. I was hoping to make some money, to be candid, but I lost it, and whatever. It was expendable money. It was a lot of expendable money, but just in full candor, I'm just sharing with you guys for the sake of transparency. I at least am happy with the fact that that was my approach. I stuck to it, and okay, it doesn't hurt me in the long run. That is not going to be the source of next month's rent or this week's car payment or whatever. That's the important thing to remember. Only invest what you can afford to lose. In fact, I'll take it one step further. I would even argue that perhaps you should assume it's going to go to zero, right? Have that like extreme mentality where you assume not only not only should I not expect sort of income and profit on this position that I'm taking, but I'm assuming it's going to go to zero. And then if you have that assumption and you're still determined, you're still willing, that's where perhaps you should be entering positions when you have that more stubborn mindset. Just my personal point of view. Again, none of this is financial advice. Number two is something that I think is self-explanatory, but as a reminder, it's always important to do the legwork, to do the research, to do your homework. There's thousands of cryptocurrencies here, far, far, far too many on CoinGecko.com, 7,323 cryptocurrencies. We present to you guys on Altcoin Buzz, a small handful, a selection of our favorites. We go over a few dozen at most. There are many, many hundreds and many thousands that we're never going to be able to get to. There are too many in this space, right? And it's still the Wild West. There are still a lot of charlatans out there and snake oil salesmen. And if there's a project that you're excited about, that you're learning about for the first time, don't take anybody's word for it, right? Because there's plenty of people on YouTube, on Twitter that are shilling for projects. They're paid sponsors or I should say they have paid sponsorships via which they'll promote a project. Maybe they have an equity taker. You never know, right? On the basis of the project's quality, objectively, is where you should be investing. And if you feel good about something, a few different people are talking about a given project or whatnot, that's fine. But take the next step, research, research, research. That is point number two. Point number three is that if you're going to get into any particular position, what I would recommend is that you do it intermittently over the course of several entries. So point number three, just in terms of general advice, and this is whether we're on a dip or otherwise, is just dollar cost average. If you know you have X amount to invest over the course of, for example, a month, if I had my $1,600 back and I said, okay, I'm interested in strengthening my Ethereum position, for example, but the price of Ethereum has been fluctuating, rather than waiting for a dip and maybe putting all $1,600 into Ethereum rather when its price has dipped, maybe what I'll do is, if I'm going to follow the DCA model, dollar cost averaging, I'm going to space it out. So I'll split up my 1,600 into four. Right now I have $400 that I'm allocating maybe once a week over the course of that month. And so if things continue to dip, then I'm okay. I'm covered. I only allocate $400 once a week. And if things continue to dip, so be it. I have more that I'll buy up when that price continues to fall, because I have more USDT on hand. So whether that's once a week or once a month or smaller amounts every single day, I think dollar cost averaging it puts you into autopilot, right? And it very much automates your strategy. And there are a lot of services out there where you can program that. So you can have apps or exchanges or whatnot, and you can program like hard into the platform itself such that you're allocating X amount of your capital every whatever frequency you want to set, and it's done automatically for you. It's out of sight, out of mind. It's a form of increasing your HODL position, really in a sense that's much simpler and stress-free and hands-off kind of way. So I'd recommend dollar cost averaging. Number four, and this is something that I just talked about. I fell victim to it this weekend. Avoid high leveraged positions. I was one of those leveraged gamblers. At least I was a leveraged gambler with an amount of capital that I was willing to lose. But still, it sucks. It's never fun. I've made plenty of money with leveraged positions to the upside, but I've lost a little bit too. And I kind of accept the wins and the losses. They go hand in hand. I realize that. Wasn't expecting the market to dip to this extent, that's for sure. But, I would say that the best approach is to HODL, maintain your core position. I do that with 95% of my assets. I'm very conservative. I stake many of those, and I kind of I don't worry about them. Out of sight, out of mind. I let them accrue interest, and I'm happy with that. And maybe I play around with 5% of my allocation in more riskier positions. That's fine. Everybody has their own numbers and their own configuration. That's a personalized thing. But especially if you're new to the space and you're not used to the volatility, even if you are used to the volatility, you're going to fail sometimes, as I did with Chainlink, unfortunately. But there is so much volatility, both to the upside and to the downside. I don't care whether you're longing or shorting. I would avoid, especially if you're new to the space, but just in general, I would avoid leverage, especially given that it goes as high as 100 times, 100x on so many of these platforms. If you're really convinced that you know what you're doing and you're certain that you'll be okay, I would play with at most 5 times leverage. It's not advisable to go beyond that. For the sake of transparency and honesty, I think I was playing with 10 times leverage, so that was a little bit higher than I should have been. But look, it's just, at the end of the day, you can't control the market. You're not a clairvoyant. You don't know where things are going to go. And when things go either up or down, they tend to do so in a hurry and they accelerate quickly, and it's very easy to lose control. So I would recommend not using leverage in any of your trades. HODL, right? Hold on for dear life and kind of forget about it. But if you absolutely insist on leverage and you are an expert and you've been in this space or at least other financial markets for a long time, you know what you're doing. 5 times, maximum. Don't do what I did at 10 times. That's a little bit too much. That's number 4. Number 5 is really, maybe should have been at the top of this list, but very simply, buy low and sell high. It sounds simple enough, but everybody does the opposite, right? Everybody rushes into an asset when it's doing super well. Think back to Dogecoin, think back to Shiba Inu. Everybody buys up the hype when an asset is at its all-time high, when it's peaking, and then it begins to crash 10, 20, 30, 40, sometimes 50% or more. People panic and they realize that, oh my goodness, I'm going to lose all my money. I put in X amount of money. I need to recoup some of what I invested, and they panic sell at a loss, right? So ultimately what people do in practice is they buy high and they sell low. No. You got to buy low and you sell high. That's the whole idea. So especially if you're just holding, especially if you're not pressured by, leverage variables or circumstances, you got to have strong hands, right? You got to buy low and sell high. And sometimes that means holding for longer than you anticipated. Maybe you hold for several years. You think of all the people that, mortgaged their houses when Bitcoin reached $20,000 in 2017. They refinanced their mortgages. They liquidated assets in order to buy Bitcoin at 20K. And then Bitcoin dipped for years, unfortunately, an extended bear market, right? And then people at 15K, at 12K, at 10K, people sold that investment because they figured, it's going to zero. What have I done? I've made this mistake. I've ruined my life. It's not a good idea necessarily to sell your home to buy Bitcoin. But even in those circumstances, if those individuals held on, they could have doubled, tripled their money in 2021. So it's all a perspective. It's all a matter, rather, of your time horizon and your perspective with regard to how long you're going to hold on to. But again, keep in mind, buy low and sell high. Everybody forgets how to do that in practice. Number 6, I think, is probably really the age-old piece of advice when it comes to any kind of investing, and that's just diversification. And you may be saying, okay, well, in cryptocurrency, it's all the same space. It's all blockchain. To a certain extent, yes. And my recommendation, not financial advice, but I would say if you're invested in crypto, it doesn't hurt to have investments in precious metals as well. It doesn't hurt to have traditional stocks. It doesn't hurt to have ETFs from other sectors entirely. So diversify yourself a little bit beyond just cryptocurrency. But even within cryptocurrency, I don't think it hurts really to invest in DeFi. I don't think it hurts to invest in different, Oracle applications. I don't think it hurts to have an affinity for Ethereum on the one hand, but hedge that with with Chainlink, with Cardano on the other. That's something I've never understood. Like the maximalists, the altcoin maximalists, I find a little bit curious because I can be a fan of both personally. Ethereum is one of my favorite projects. Great. But hey, I see that Cardano is doing things that maybe Ethereum can't do or can't do yet. And I could see a big future for both. So when, one kind of goes up and the other's faltering or vice versa, like I'm happy because I believe in both. It's not some religion, right? It's not like it's some mutually exclusive thing where I have to put all my eggs into one basket. So even within cryptocurrency, I think diversification is important personally. And you can also, again, I'm not going to advise or suggest how to do this because none of this is financial advice, but outside of cryptocurrency too, I think there are other assets. If you are interested in hedging against things like the dollar, which many of us in this space feel is not doing so well and it's not going to do very well in the next 5-10 years. There's all kinds of different things, approaches you can employ regarding, as I mentioned, I mentioned before, precious metals. You can look at commodities, for example, and ETFs in that regard. In some, diversification is always a good idea. That's what I want to impart here. And then finally, I think it's important to set targets. So as we spoke about just a moment ago, the fate of the dollar, the future of really the USD as a global reserve currency, you have to look no further than here on CNBC, Stanley Druckenmiller's recent comments talking about how the mismanagement by the Federal Reserve is totally undermining the United States' ability for its dollar to remain dominant on the global scene over the course of the next 10 to 15 years. So we talked a moment ago about how, of course, many of us are hedging against these kinds of outcomes. So point number 7, as I mentioned, is just to set targets. What are your targets? What are your goals in this space? Are you trying to save up to buy a car? Are you trying to save up to put a down payment on a house? Maybe you don't care about saving up to convert into dollars at all, because this, personally, looking at this is kind of my time horizon. This is my outlook and this is my time frame. I look at the paradigm shift that's happening in the world right now, right? The destabilization of certain currencies, especially the dominant ones, the rising inflation, the soaring and out of control debt. For me, it's not about accumulating in order to cash out into that currency. It's about accumulating as much as possible and holding it for the next decade or longer. And ultimately, my personal goal is to cycle into altcoins that are performing well and then cycle out of them back into Bitcoin and Ethereum, as well as a couple of others I've mentioned before that probably my forever holds are Bitcoin, Ethereum. I like Litecoin personally. I think it's going to be around for a long time. Cardano, Theta, VeChain as well, and maybe one or two others that I'm still contemplating. But those ones for me are very big. CRO is probably another forever hold because I do a lot of work in the crypto.com exchange and the app. But other than that, everything is just a means to an end when it comes to increasing my positions in Bitcoin, Ethereum, and those other altcoins, and then ultimately working toward maximum accumulation over the course of the next decade, because I agree with Mr. Druckenmiller. And why wouldn't you? The guy's a billionaire. He's been around the block. He knows what's up. But whether you have supermassive goals, that are decades from now in terms of when you want to realize them, whether it's just something for the end of the month, I think you should set goals, have targets. That structures your ambition and forces you to think more aggressively and kind of grounds you a little bit in that thinking. So you're going to know for certain whether or not you're approaching those goals, whether you're deviating from them. It's also important to track those goals. So in whatever way you choose to do that, whether it's through software, whether it's through your own spreadsheets that you create, understand where you're investing, how many wins you've had over the course of those investments, what's been working for you, what hasn't been working, and keep it honest, be accountable to yourself, but track everything quantitatively and objectively as much as possible. But have goals, have targets, have ambitions, set them clearly and work toward them in a way that you're tracking and you're following. And look, guys, none of this is financial advice, but I just wanted to provide a little bit of, call it optimism or whatever, because it's been a difficult time in the market right now. Bitcoin, as I finish up this recording, is sitting at, it was about $45,000, looks to be just below that right now, 44.6. Unfortunately, everything is following Bitcoin's lead right now. It could be a time to scoop up some of your favorite altcoins on the dip. Not financial advice, but look, these 7 rules, I'm going to review them here just very quickly, list them off here. Again, invest only what you can afford to lose. That is universally sound advice. Research everything you put that money into. Dollar cost average your investments as much as possible. That just automates the process, and it takes your mind off any anxiety that would otherwise be associated with it. Avoid high leverage. Don't be a gambling leverage dummy like me. Buy low, sell high. Don't do the opposite. Buy low, sell high. Sometimes that means having strong hands, sometimes for extended periods of time. Diversify your investments, not only within cryptocurrency, but with other asset classes beyond cryptocurrency. And finally, set targets. It's important for really motivational purposes as well. Guys, That's all I had. This was kind of a stream of consciousness kind of video, a little bit different, but I did want to share this with you today. Let me know whether you've taken advantage of this dip. I had a poll up just the other day. I was asking on this dip, are you buying? Are you selling? Are you holding, or are you praying for dear life? We're gonna let that mature a bit and see what the responses are like. But that is about it for this Monday, everybody. Do be sure you're following us on all the regular social media channels. Keep checking back into altcoinbuzz.io for all the latest. Like, subscribe, share, hit the bell to receive notifications if you enjoyed today's video. Best of luck if you choose to invest. Be careful, everybody. None of this is financial advice, as you know. Stay safe. Have a great beginning to your week. As always, we do hope to see you again soon in our next video. Take care.